Okay, what's up, y'all? Hold on, I'm pulling out of Home Depot here. So, we're going to be having a conversation about index funds and ETF funds. Because I think for a lot of investors, it's something you really want to consider. So, let's first just kind of describe the market we're in. This is not what one would describe as a risk-on market. We are in a risk-off market. We're in a market where a lot of retail is scared, and a lot of Wall Street doesn't want to put large amounts of money into high-risk, high-reward companies. So, if anyone's like, here, go ahead, go, you can, yep, no problem. If anyone's invested in very high-risk, high-reward companies right now, just keep in mind that the markets could continue to get worse and worse, especially if a recession comes, and you just have to accept that there's a possibility that all those very risky stocks you're in could get thrashed even more and more. And those, so if something doesn't fundamentally make sense from a financial standpoint for the company, you may have to open yourself to the possibility of cutting losses on those kind of stocks. But, that's not entirely what this video is going to be about. It's partially what it's about, because I want to talk about basically how index funds and ETF funds may be something you want to consider. So, if you look at the history of the U.S. stock market, let me try to adjust the angle of the fucking camera. That's a little better. So, if you look at the history of the stock market, especially if you look at the history of, obviously, if you look at the history of the stock market, you'll see it does, in fact, go up. But that's not every stock. That's just representing the average. And when the average is represented, a lot of the time, that's reflected in index funds and ETF funds. A lot of index funds, or like whole world index funds, or US-based index funds, represent a lot of the larger market cap stocks, but just in general kind of represent the stock market as it is, the way you see it. So you're taking on a lot less risk when you've got a whole basket of basically the entire world, or even just US-based, whatever index fund or ETF fund you pick. But you've got, like, for example, it's called like the VT fund, like a Vanguard index fund, that's like a basket of the world's best stocks managed by extremely, extremely intelligent people over at Vanguard. Some of the best some of the best financial minds that you could possibly have managing your index fund. That's where it is, and there's plenty of great index funds, but if we're actually talking an index fund to buy, you should be, my personal opinion, don't take it as financial advice, but my grandfather, he's been in the stock market. He was a little late compared to me, but he's been in the stock market since he was 40 years old. He's friggin' over 80 years old now, so that's, man, sometimes I look at the way people drive and I wonder, fucking idiot, I wish I could show you what this guy's doing. But he's been in the stock market for basically since like the 80s, early 80s. He's seen a lot, and he told me, he said, look, and again, not financial advice, but there's lots of good index funds out there, lots of good ETF funds out there. Vanguard by far has the best, the most well-managed financially, will hold up most likely the best. Just, it's just about who's managing your money, because at that point, if you're investing in an index or ETF fund, it's about who you're picking to manage your money and pick the best basket of stocks that are out there. So if you were interested in an index fund, you may want to consider a Vanguard index fund. They are some of the best out there. But yeah, I mean, look, I personally feel you may want to, especially in this riskier environment for the stock market, you may want to consider an index fund or ETF fund. And when I say ETF fund, I don't mean ARK, because that's about as high risk as you can get. But you may want to consider something like a Vanguard indexed fund. It doesn't have to be your whole portfolio, but if I'm being honest, my personal opinion, if you're newer to the stock market, you don't feel confident about making picks right now in the stock market, and you just don't know what to do at this point, but you still want to be exposed to the stock market, you should be looking into index funds to be making up at least 90% of your portfolio, I would argue. And then if you want to play around and hopefully make financially educated moves on other stocks, solo picks, not high risk, high reward companies in this environment, then that's your prerogative. But, people say index funds are boring. Well, you know what's not boring? Not losing your money. Okay? I don't find it boring when your money is actually safe. If people find it exciting to invest in unprofitable companies that are high risk, high reward, and we're not in a risk on market right now, if you find it exhilarating watching your money dwindle away, then maybe that's for you. Maybe index funds are boring and it's not as hands-on, but I think people buy a stock and they pay attention to it a little too much anyways, because they may be down on it so much that they want to constantly, watch it and keep their eyes on it at all times, which only makes it worse. Sometimes it's better just to put your money in an index fund that's well managed, well run, that picks a nice basket of well-rounded stocks that are fundamentally strong, that makes sense, and let someone else do a lot of the hard work for you, because why friggin' not? I mean, again, if you go ahead and look, for example, there's many different index funds. You can look at plenty of them on your own time here, but go look at VT. Go on your Robinhood, your Charles Schwab, your Fidelity, whatever account you have, and look at the stock history on that, and you will just see absolute up. Over time, it's done nothing but go up in return, an average of 10 plus a year. And you know what? That's nothing to scoff at, because the power of your money exponentially going up and building on itself is a real thing. It just takes time. Too many people want the 10x. You're going to win in the end if you invest primarily in index funds. Again, I don't. The only index fund I am exposed to is through my work, through my Roth IRA. And I'm okay with that. I do solo picks, but it may not look great now, but a lot of my solo picks, I do a lot of financial research on. I don't do very much high risk, high reward companies. I look at companies that are financially strong cash flows, strong growth, strong projected free cash flows in the future. And I value the companies based on that. So I do a lot of solo stock picking, but I'm also a long-term investor that's willing to wait this out into the future and hopefully be rewarded on a lot of my stock picks, because I did the research and I put the time in. But, I mean, you know what? Where'd my thought process go there? Oh yeah, so my exposure to index funds is just through work with my Roth IRA, and I'm absolutely fine with that. I contribute the maximum amount I can every single paycheck to that Roth IRA, and into what is actually, through my work, a Vanguard index fund, which is phenomenal. I love it. And that's my exposure. But you know what? I think everyone should be exposed to a certain degree to index funds because they just make sense and they've financially proven themselves through the years. If you have the correct people managing your money, you're going to end up doing well at the end of the day. If you're in an index fund 30, 40 years, and then you enter retirement, and you start investing now, I guarantee it's going to be way higher then versus now. Even though it seems like it's kind of going down now and then hit a high for most index funds. But that's because the stock market had been hitting all-time highs. I mean, here's the deal. It's a belief in the concept of the stock market. If you believe in the concept that the world will continue to grow, then you should be invested in an index fund because index funds capture and represent the idea of capturing stocks from all over the world that are financially and fundamentally the best, making a basket of them, and then it's managed by financial institutions like Vanguard, for example, with a Vanguard index fund, constantly managed so that, oh, well, maybe this stock got a little risky, let's sell out of it, and let's add this one in that makes more sense. So you're going to have something constantly managed, and something that in the long run is going to go up. If you believe in the world growing, then the stock market continues to grow in time. That's just how it works. If you don't believe in the concept of the world continuing to grow, financially, which means the stock market grows, if you don't believe in that concept of the world growing, then you shouldn't be in the stock market. Just bottom line. And that's a long-term vision, not something that's a short-sighted thing or very short-term. So again, I mean, people that are in riskier stocks that want the immediate gratification of a 10x, 5x, 100x, whatever the hell some of those thumbnails are boasting, consider some exposure to index funds or ETF funds because it mitigates your risk in the stock market. It really does. And again, myself personally, I do have some exposure through a Roth IRA that I have through my work. But, mainly I do solo stock picking. But again, it's under heavy scrutiny by me and a lot of fundamental and financial analysis before I even settle on any stock that I would buy. For those of you who, index funds are for everyone. Whether you're unsure in this market and you're afraid and you don't know what to do, you're newer to the market, or even if you're seasoned, index funds are for everyone. So don't try to hit some home run on some risky stocks. I would just recommend you consider index funds. Look at the different ones and how they've performed over the years, okay? And make your consideration based on that. Don't take my word for it. See how index and ETF funds have performed over the years and see that the proof is in the pudding. And if you like what you see, then make an investment based upon that, because if you believe in the concept of the world growing, continuing to grow, then the stock market over the next, let's say, 30 years will continue to grow, and you will win when it comes to investing in, something like an index fund or ETF fund. That's financially and professionally managed. It just makes sense. But, okay, yeah, I mean, that's all I've got to say about that. Again, recap, this is just a stock market where you really shouldn't be in riskier stocks, and if you are, that's your prerogative to reevaluate the company on a fundamental basis and financially and make your decision. Did I invest in this on hype, or was there a fundamental reason financially? Because if there was, and you can make sense to yourself why you should stay in the stock, that's fine. But for some people, it was just, a hype investment, and you may continue to bleed if it's a stock that doesn't make sense financially, especially in this environment where, the NASDAQ can easily dip way down again to initial, I don't know, fucking, like early COVID levels. Like you could be down to, low 3,000s. I don't know if we're going to see two again, but yeah, okay, yeah, I'm pushing this video on like way too long, but yeah, guys, I mean, look, this is not a risk-on environment, and even when you're in a risk-on environment in the stock market, I believe in the concept of maybe making just some like short-term trades, like some, I guess you want to call it a day trade. Like I was watching the charts, I was watching the sentiment around the stock. I invested in NEO at 11 a share and sold at its peak of 55 a share. That's a very short-term trade. I didn't believe in the company fundamentally or financially. I think it's getting better for the company, but especially at, above 20 a share, I mean, it's just laughable. It's crap financially. So, again, it's all risk reward in your mind. And what's your risk appetite? What is your risk appetite? You may be young like me, but what is your risk appetite? What, are you all in high risk, high reward stocks and you're willing to wait 10 years and see if you got burned or not? All I'm saying is you may want to consider some exposure to index funds because it brings stability to your portfolio and mitigates some of your risk, especially in this environment where you don't know where a lot of these riskier stocks are going to go. You don't even know where some solo picks for a company that's fundamentally strong is going to go. So, okay, that's my take on index funds. I highly recommend a level of exposure for any investor, but especially someone newer to the market who might be a little confused and doesn't quite know what move to make. So that's it, y'all. Thanks for watching. Let me know your thoughts down below, and I'll see you in the next one. Bye-bye.